I take one, that will be the greatest risk is if China's inflation is out of control. And then there will be a lot of administrative measure, and then high interest rate, and tighten the credit in China, and slow down all the world economic growth and people's anticipation of the economic power and engine from China. And all the commodity market and everything have to adjust. That is the greatest risk as I will anticipate if there's something happen in China.
That's a hard one. But to take the obvious approach and perhaps to expand what the previous speaker said that I tend to agree with actually is that you have to look at the growth drivers. What drives global growth? If there is a risk in that, there is a risk in everything. Now, if you look at those factors, and one of the most important things, at least for me personally, was the fact that even before this crisis, pre-2007, that was the first year I can recall when the role of China and India in terms of country contribution to growth grew more meaningful than that of the United States, Europe, or Japan. So this happened prior to the crisis. It's a secular trend that has continued, expanded since 1980s with the China's opening and India's crisis in 1991, 92, and so on and so forth. If anything would harm this development, the very growth that all of us depend, despite all the debate in the US, despite all the arguments in Europe, why does Sweden thrive? Because you have companies that are willing to make a deal with for their Volvo. Why can even the small Finns thrive? Because Nokia was willing to move fast to China and then to India and now to Africa. So as long as these growth drivers are intact, you will see pleasant development. It won't be smooth, especially in the next 10 years. But if they are harmed, something far worse will follow. And the examples, parallels can be found from the 1920s, from the interwar period, when not only did globalization plunge, but you didn't have meaningful regionalization. Instead, you have investment in nationalism, you have protectionism, signs of which we can find quite well. Even in European countries that used to be governed by socialists for quite a long time, now you have the new extreme right positioning itself. So it's the growth drivers, the largest growth drivers that matter the most. Having said that, their role can be escalated, their growth input can be escalate if you have more erosion in the Middle East. So, because they depend dramatically on the energy resources in a way the developed countries don't. So what we have seen in the Middle East, I'm afraid, is a prelude to something far more uncertain. To give a sort of anecdotal summary on this, when I was in Singapore, spent there 2 months working on the Singapore EU Center issues of Europe, US, Asia. I had one presentation in their leading think tank where the former chief of Association of Southeast Asian Nations entitled the speech, "The Impending Perfect Storm." And it was a very strong sense among people over there that it is really what happens in the Middle East right now that can push things in a way that can create a tipping point for the development of these large emerging economies, which now account for the global growth, and thereby the risk might be relatively highest there.
Okay, thank you very much. Ladies and gentlemen, we're going to take a break. It's a networking coffee break.